Bitcoin doesn't compete with the dollar. Bitcoin competes with capital assets in the world, right? And there are $450 trillion of those capital assets. So think you own a Nigerian warehouse. You own 1,000 acres in Siberia. You own a private portfolio of Chinese stocks, right? You own a bar of gold, right? Why do you own these things? Because you had to put your money somewhere. So Bitcoin is replacing or competing with those things. If you look at the M2 money supply, I think the US dollar was showing as like 13, maybe 17% of that. And the primary competitors of the dollar are CNY, Euro, and JPY, Yen, Euro, and Chinese currency. So as the stable coin, as the digital currency backed by the dollar starts to circulate, that number is going to go from 17% to 30%, right? And what we're doing is we're really competing with other world currencies. And then the Bitcoin asset is less than 1%. And as it grows, if Bitcoin goes to $13 million a coin, then Bitcoin will go from 0.5% or 20, 30 basis points of the world's capital assets to 13% of the world's capital assets. It will still compete with real estate, equity, and bonds, but it will emerge as like a monetary index for long-term money. And so that's why it's important to understand this idea of digital commodity, because the use case of a digital commodity is not capital creation. That's why all the altcoiners, that's why they don't get, if you have zero money, you can't buy Bitcoin. So if you have zero money, but you're a podcaster, you need to issue a token to raise money. So capital creation is a use case of a token. The use case of a digital commodity is capital preservation and appreciation. If you already have money and you want to store your money for 100 years without worrying about risk, then you want to put it in a savings account. And so traditionally, the king commodity as a long-term money was gold. And what happens is gold demonetizes silver, and silver demonetizes copper, and copper demonetizes glass beads, and they all demonetize the giant stone coin of the Yap people or bales of tobacco. And so Gresham's law says the strongest money wins. In the end, there can be just one. We're all going to go to the strongest form of money. So the strongest form of long-term money, which I'll call capital, is Bitcoin right now. And all these other assets are going to be traded in for Bitcoin. And there's no point creating a second or a third Bitcoin because there's only one network that's going to win. The rest are just going to collapse against it. But the real point here is you want a commodity to be a store of value, and it needs to be an asset without an issuer. And so if you look at all these asset classes, what you have is digital tokens, an asset with an issuer with very light regulatory touch. You can issue it overnight. A digital currency is an asset with an issuer, but it's just pegged to a nation state currency. A digital security is an asset with an issuer, but it's really tokenized stocks or bonds. So it's like BlackRock releasing tokenized Apple shares or BlackRock releasing tokenized S&P index. It would be a token that circulates on a crypto exchange at the speed of light 24/7 globally, but does have an issuer. And Bitcoin is special because it's an asset without an issuer. And why would you want an asset without an issuer? Because you're a company that doesn't want to trust any other company, or you're a country that doesn't want to trust any other country, or you're a saver that wants to store your money for 200 years, and you don't expect any company to last 200 years, and you don't expect any government to last 200 years. You just want your family to be rich forever. I think there's only one universally acknowledged digital commodity in the world.
Okay.
Right? There's only one. There's Bitcoin. I've said that, right? There is no second best. I've implied that and said that, and I've spent $33 billion based on that. So yeah, it was my view 4.5 years ago, there's one digital commodity. But Christine, there's a more important point here. Even if there was a second, third, and fourth, like let's take the fork wars, Bitcoin Cash, Bitcoin Satoshi Vision. Even if you fork Bitcoin and you maintain that's a commodity, they're all going to zero if the use case is store of value or cap or money, right? Because if you were to fork Bitcoin and claim it's decentralized, the free market is going to pick the strongest network and it's going to be monetized and everything else is going to zero. So it doesn't matter from a practical point of view. My position is not that you couldn't theoretically create another digital commodity. For example, if China forked Bitcoin and declared China coin, and then said it's legal to mine China coin and it's tax-free to hold China coin and you can bank China coin in China, in theory, the power of a nation state could create digital property in China. Just like for example, I acknowledge that real estate in China is an asset without an issuer. I just don't want to own it, right? Like an American doesn't want to own Chinese real estate. An American wouldn't want to own China coin. But in theory, if you understand the economic theory of a crypto commodity, you could create it. It's just very unlikely at this point you can ever create a global money that's a crypto commodity because Bitcoin has $1 trillion of smart money behind it. And the next best thing doesn't have even 1%. I mean, less than 1% of that. I think that when I gave that speech, it was Bitcoin Nashville in July of 2024, and I gave those forecasts. And obviously, I gave them, there's a model, Bitcoin 24, it's published, it's on GitHub, just go Google it, download it, and you can plug in all your own assumptions about inflation and innovation. The two big drivers of Bitcoin price going up are innovation and inflation, right? Bitcoin's going to go up because capital is going to be created by technology. And as the world gets richer, the capital is going to have to find a home. And Bitcoin price is going to appreciate because there'll be more currency, more dollars, more pesos, more rubles, more everything. And the price is going to appreciate because people are going to sell their 20th century physical assets and financial assets and the like in order to buy digital assets. And that trend is going to accelerate as people get educated, because why would anybody want to own a warehouse in the middle of Africa when you could own the equivalent amount of Bitcoin? They're all going to trade when they can. It's just going to be a question of supportive institutions. Give me a safe way to buy $1 billion of it, and then supportive regulations, and then education. So these are all things that are simple to predict. And that was my prediction in July of 2024. But look what happened since then, right? Since then, we had a red sweep. You had a pro-Bitcoin Congress, pro-Bitcoin Senate, pro-Bitcoin House, pro-Bitcoin president. You have every cabinet member, or nearly every cabinet member, owns Bitcoin, is pro-crypto. They're all very supportive. And now you have a supportive Secretary of the Treasury. You have one executive order, directing that we create a vibrant digital assets industry in the United States. You have a second executive order creating a strategic Bitcoin reserve. You have a huge amount of momentum. What I've seen is a sea change over the past 16 weeks. Most conventional investors and traditional investors everywhere in the world that were not interested or afraid of this asset class, they have all flipped their view to being very curious. So I've been invited to conferences in South America with the 100 wealthiest families for the first time. I've been invited to speak to all the Middle Eastern sovereign wealth funds for the first time. I've been invited to speak at Morgan Stanley's tech conference, the most prestigious one in the tech industry of tech investors, for the first time. I've been invited to speak at CPAC, the Conservative Political Action Committee, for the first time. I've been invited to the White House to speak to the President of the Cabinet for the first time, right? And so There's that speech that I gave on Tuesday at the National Press Club on, there were 2 senators on stage with me for the first time. And so what you have is an avalanche of institutional interest by mainstream policymakers, business leaders, investors. And if you roll the clock back 16 months, none of it existed. The number of institutional investors invested in spot Bitcoin ETFs went from 6 to 3,300 over 12 months. So I would say that institutional adoption is clearly afoot.
Yeah.
All of the regulators in the world will talk about digital assets and they'll talk about Bitcoin. They won't do anything until Washington, D.C. financial regulators take a position. And so the future of digital tokens, digital currencies, digital securities, and digital commodities will all emanate from Washington, D.C. And every other financial regulator and every banking regulator everywhere in the world will follow. And I'm not just talking our allies, the Brazilians, the Emiratis, the Europeans, our enemies or our quasi-enemies or our frenemies. The Chinese, the Russians, everyone is going to copy the taxonomy and the principles that are set in the United States. And I'm not speculating, I'm telling you from first-person knowledge because I talked to them. I'm saying I talk to people in South America and they say our banks will not embrace this until the US does it. And so the entire industry has been frozen up until November 5th. And on November 6th, we thought things might get better. But if you look at the parade of positive actions that are good for the digital assets industry, good for the crypto industry, good for Bitcoin, I think it's exceeded everybody's expectations. I don't think anybody expected, every member of the cabinet to be pro-crypto, pro-Bitcoin. Every member of the cabinet. There isn't any, it's one thing to say, well, we elected a president that stopped suing us, right? Ended the war on crypto. But we went from a war on crypto to every crypto enforcement action getting unwound day by day to now a very, very positive, not just positive in an ambiguous way, positive in a decisive way. We're going to do this. We're going to do this week. Next week, we're going to do this. In 6 months, you better do this.